Picture this. You're in the midst of a carnival, surrounded by a sea of flashing lights, cotton candy vendors, and laughter. Everything appears merry, but deep down, you can't shake the feeling that something is amiss. This is the sensation many investors are grappling with in today's market. Jeremy Grantham, the renowned investment guru, shares this sentiment, boldly declaring that we are in the midst of a historic financial bubble unlike any we've seen before. Mayhem next week might sound like a sensational headline, but Grantham's insights are anything but sensationalistic. In his own words, he acknowledges the bubble, but emphasizes that it's unlike any other we've witnessed in history. Unlike previous bubbles, which often saw soaring markets fueled by unrealistic expectations, today's bubble is marked by paradoxical conditions. Grantham points out the conundrum we find ourselves in today. On the one hand, we have stock markets boasting some of the highest price-to-earnings or PE ratios in history, placing us in the top 5%. On the other hand, the global economic situation is languishing in the lowest 5%, with the specter of uncertainty looming large due to the ongoing pandemic. He sheds light on what's driving this perplexing scenario. It's a triad of factors: central banks, the Federal Reserve, and unprecedented fiscal spending, all on a global scale. Never before in history have we seen such a synchronized effort by governments worldwide, each determined to open their financial floodgates. In their bid to combat economic woes, central banks have flooded the market with liquidity, a move that has proven remarkably effective at inflating asset prices. It's as if every dollar not spent in the real world is finding its way into asset markets, propelling stock prices to dizzying heights. Grantham introduces us to a conflict of epic proportions. The struggle between the tangible realm of productivity, employment, and GDP versus the ethereal world of PE ratios and skyrocketing house prices, fueled by easy credit and rock-bottom interest rates. This divergence paints a complex picture where Main Street and Wall Street seem to be on entirely different trajectories. He acknowledges the bittersweet reality that while this may be a boon for the stock market, it might not necessarily translate into prosperity for the broader economy. The burning question remains: will reality eventually catch up with soaring PEs? Comparing the current economic landscape to a novel virus, Grantham underscores the uncertainty of our times. Unlike prior bubbles, where we could draw on historical data for guidance, today's unique forces make predictions challenging. Grantham concedes that confidence in the outcome is less certain than ever before. Grantham elucidates a fundamental principle: buying overpriced assets guarantees low returns. However, he tempers this with a crucial point: owning overvalued assets doesn't necessarily equate to getting wiped out overnight. It's a waiting game, and timing the bubble's burst is more art than science. He takes us on a journey through history's most infamous bubbles, emphasizing a recurring pattern: legendary stories of irrational exuberance preceding their spectacular crashes. These stories, fueled by sheer craziness, are conspicuously absent from the recent 10-year bull market. But that's changing. In the current climate, Grantham identifies a rapid acceleration in price rises, reminiscent of late-stage bubbles. He points to SPACs, special purpose acquisition companies, as a modern-day example of exuberance, where investors are essentially handing over their money with the promise of future utility, echoing the South Sea bubble's follies. Grantham draws parallels with the dot-com bubble of the late 90s and the early 2000s, and the lead-up to the 1929 stock market crash. In both instances, we witness the same kind of irrational exuberance, speculative fervor, and rush toward risky assets. This time around, it's no different. Grantham believes that we are inching closer to the bubble's breaking point, a psychological tipping point that could be mere weeks or months away, not years. He empathizes with investors grappling with low yields on fixed income investments. In a world where even safe investments fail to offer significant returns, it's tempting to turn to the stock market, where at least some gains can be made. He acknowledges the logic of this short-term approach, but cautions against overlooking the long-term consequences. It's essential to recognize the difference between short-term gains and long-term stability. "Don't fight the Fed" is a familiar mantra among investors. Grantham echoes this sentiment, acknowledging that, in the short term, the Federal Reserve's policies can drive market dynamics. However, he points out that over-reliance on the Fed can lead to trouble, as seen during the tech bubble of the early 2000s. While the Fed can influence markets, it cannot indefinitely sustain a bubble. Grantham offers examples of previous bubbles, like the Japanese asset bubble of the late 80s, to emphasize that bubbles do burst eventually. The investment landscape has evolved significantly since the turn of the century. Grantham suggests that the idea that this time is different should be replaced with the notion that this time is never different. He argues that change is constant, and that the certainties of the past no longer apply. He recognizes that the traditional value investing approach may not be as reliable as it once was, but suggests that it remains a potent weapon when the parameters are pushed to historical lows. Grantham believes that we are on the cusp of a significant reversal in favor of value stocks. While we may not see a return to the values calculated 2 decades ago, there is a strong likelihood of a substantial shift in the value of stocks sooner or later. For investors seeking a path forward, Grantham's advice is clear: emphasize emerging markets and de-emphasize the U.S. emerging markets, with their historically low valuations and the promise of substantial growth presenting a compelling opportunity. China, poised to represent over 30% of global growth in the coming decades, leads the pack. India too is on the ascent. Together with other emerging economies, they form a significant portion of global GDP and offer a diverse range of investment opportunities. He paints emerging markets as a bet on the future against the past. These markets offer a compelling alternative to overpriced U.S. assets. While the temptation to invest in U.S. giants like the FANGs, Facebook, Amazon, Netflix, and Google, may be intellectually appealing, it's crucial to consider the financial risks associated with such investments. Shorting, Grantham contends, is a treacherous game best left to seasoned professionals. The unpredictability of markets, coupled with the potential for one last upward surge, can lead to substantial losses for short sellers. Grantham acknowledges that government spending, when done correctly, can be a powerful tool for boosting the economy and improving the lives of workers. However, he points out that the US has lagged behind in terms of real wage growth for decades, a trend that needs urgent attention. In conclusion, Grantham's insights offer a sobering perspective on the current financial landscape. While the world may seem like a carnival of unprecedented proportions, there are signs that the party may soon come to an end. Investors are urged to tread carefully, emphasizing emerging markets or deep value opportunities while remaining vigilant for signs of irrational exuberance. Ultimately, the financial markets are in a constant state of flux, and adaptability is key to navigating the storm. As Grantham reminds us, this time is never different. and history often provides valuable lessons for those willing to listen. We appreciate you taking the time to watch our video. If you liked it, be sure to show your support with a like and share it with your friends and family. To stay on top of financial matters, subscribing and hitting the notification bell is highly recommended. This way, you'll be among the first to know when new content is released.